What if you could focus on just one candlestick pattern and ignore the rest? Because most traders keep jumping from one strategy to another and end up completely confused. But pro traders? They master a few setups and execute with discipline. In this video, I'll show you one of the most reliable candlestick patterns. Before we start, let's get one thing straight. There is no such thing as a 100% accurate pattern. What actually works in trading is probability, confirmation, and context. The pattern we're about to cover works because it reflects real market behavior. Not theory, real behavior. The pattern is bullish engulfing. It's a two-candle pattern. First, a red candle, followed by a strong green candle that completely engulfs it. This signals one critical thing, a shift from sellers to buyers. And when that shift happens at the right location, it becomes one of the most powerful entries in trading. Here's what's actually happening behind the scenes. The market is falling. Sellers are confident. Price keeps dropping and no one is stopping it. But then, buyers step in. Aggressively. Price shoots up and closes above the entire previous candle. This does two things simultaneously. It traps the sellers who were short, and it attracts fresh buyers looking for momentum. That combination is exactly what drives the next move higher. Now here's where most traders get it wrong. They see the pattern and instantly buy. That is not how professionals do it. Pro traders follow a checklist. Here it is. Number 1. Trend context. Use this pattern during an uptrend pullback or near a key support level. Number 2. Key levels. The pattern works best when it forms inside a support or demand zone. Strong zone, higher probability. Number 3. Confirmation. Do not enter on the engulfing candle itself. Wait for the next candle to push higher, then enter. Number 4. Volume. A volume spike under the engulfing candle confirms real buying pressure. No spike, treat with caution. Number 5. Stop loss. Place your stop loss below the low of the pattern. Defined risk, always. This is the difference between gambling and trading with a process. Now here's what to avoid. Do not trade this pattern in a sideways ranging market. Do not enter a random engulfing candle in the middle of a chart with no context. Do not skip confirmation and jump in early. And do not overtrade looking for this pattern on every single candle. One good setup executed well is worth more than 10 average trades. So instead of chasing every new strategy that comes along, master one pattern. Understand the psychology behind it. If you found this helpful, hit like and subscribe for more breakdowns like this every week. And comment engulf below if you want me to drop a full strategy guide. I'll see you in the next one.